Hey guys, it is Julie here with JT Wealth. Today we're taking a look at 5 great dividend stocks for the month of January. Alright guys, welcome back and thank you all so much for being here. The year 2022 is coming to an end, and to this past year we say good riddance. It has been a very volatile time in the market, so now we can start to look forward to 2023. Now, there are some varying outlooks, but many are feeling optimistic for some healthy recovery by year end. But of course, there could be some near-term volatility, so still a great time to be hedging your portfolio with some solid dividend-paying stocks. And that brings us to today's video. We're going to be looking at 5 different companies, all with an ex-dividend date in the month of January. These companies come from a variety of sectors with a range of dividend yields, but all with sustainable payout ratios. So we're going to take a look at each of these companies, their dividend, what the company does, and we'll head over to TipRanks to see how Wall Street analysts weigh in. And of course, if you're wanting to sign up for your own TipRanks subscription, make sure to use my links down below where you can get 10% off. Now, as I said before, we have 5 different companies that we're going to look at today. I had a hard time narrowing down the list. There was actually quite a few with ex-dividend dates in January, but we're going to jump right in so we don't waste any further time. Starting off with technology company Cisco Systems. Their stock trades under the ticker CSCO, currently priced at $47 per share and a market cap of $195 billion. Cisco just started paying a dividend back in 2011, and they've increased their dividend every year since. They pay a quarterly dividend of 38 cents per share, with an ex-dividend date coming up on January 4th for payment on January 25th. Their current yield comes in at 3.18%. Cisco works to help customers connect, secure, and automate to accelerate their digital agility in a cloud-first world. They offer a broad range of technologies across multiple categories, including secure and agile networks, hybrid work, end-to-end security, internet for the future, and optimized application experiences. In their most recent quarter, the company returned over $2 billion to shareholders, and they had revenues of $13.6 billion, which grew 6% year over year. Taking a look at the Wall Street analysts on TipRanks, the Cisco stock currently comes in as a moderate buy based on 5 buys, 6 holds, and 1 sell. Their average price target comes in at $55 per share, which would be an upside of over 17% for the next 12 months. As expected, our lowest rating is that sell rating from last month with a downside of 7%. The high end, we do have a buy with an upside of over 41%. Second on our list, we're moving over to the financial industry with JP Chase. With a market cap of $390 billion, they trade under the ticker JPM and are priced at $133 per share. Now, it's hard to say an exact date for their first dividend payment, as the company is the result of many mergers over the years, but JP Morgan has been paying since 1990 and Chase Manhattan since 1972, so we have decades of dividend payment history between them. They currently pay a quarterly dividend of $1 per share for a yield of 3.05%. Their next ex-dividend date is coming up on January 5th for a payment date of January 31st. JP Chase & Co. is one of the world's oldest, largest, and best-known financial institutions with roots back to 1799 in New York City. The company now operates in over 60 countries with more than 240,000 employees worldwide. Serving millions of customers in the United States, they have assets of over $2.6 trillion and are a leader in investment banking, financial services, commercial banking, and asset management. Their stock currently has 13 analyst ratings, coming in as a moderate buy with 9 buys and 4 holds. The average price target for the stock comes in at $143 per share, which would be an upside potential of nearly 8%. And the most recent rating came in just 2 days ago from a 5-star analyst at Oppenheimer, giving the stock an upside potential of 27%. On the low end, we do have a buy rating from 24 days ago that we've already surpassed in price, so it now has a downside of about 2%. Third on our list today, we're looking at an oil and gas company that I know I've discussed on videos in the past before, but that is because they have a great dividend program, so worth mentioning again. That is EOG Resources. Their stock currently trades under the ticker EOG, priced at $128 per share with a market cap of $75 billion. Their ex-dividend date will be coming up on January 13th with a payment date of January 31st. The next dividend will be 82 cents for a dividend yield of 7.3%. Now you might notice that the chart at the bottom seems a little up and down. And that is because EOG Resources does a variable dividend. That means that they have a fixed, regular quarterly dividend, currently at 82.5 cents per share, which was recently increased by 10%, and then they top that up with a special dividend. The company is committed to returning 60% of their annual free cash flow to shareholders. The company boasts 25 years of stable and growing regular dividend payments with a 22% compound annual growth rate. They've never suspended or reduced their dividend. Based out of Texas, EOG Resources is engaged in the exploration, production, and development of crude oil, natural gas, and natural gas liquids. They are focused on being among the lowest cost, highest return, and lowest emissions producers, playing a significant role in the long-term future of energy. They are one of the largest crude oil and natural gas exploration and production companies in the United States. There are currently 20 analysts with ratings on the EOG stock, coming in as a strong buy based on 16 buys and 4 holds. Their average price target comes in at $156, which would be an upside potential of over 21% for the next year. While we do have a couple of downgrades within the last month, they still have upside potentials in the double digits, and on the high end we have one buy rating from about a month ago with an upside of over 34%. Fourth on our list, we're headed north of the border. This company is one of the first stocks I ever purchased and held when I started investing over 10 years ago, and actually holds the #1 spot, my biggest position in a single company now. That is the Royal Bank of Canada. Trading in both Canadian and American markets, the Royal Bank of Canada trades under the ticker RY and is currently priced at over $93 per share. The Royal Bank holds one of the longest track records for paying dividends. They first started paying a dividend back in 1870, over 150 years ago. They currently pay a quarterly dividend of 97 cents per share for a dividend yield of 4.11%. Their next ex-dividend date is coming up near the end of the month on January 25th for payment on February 24th. With over 17 million clients worldwide, they hold a strong market position across 5 different business segments. The company has also been recognized as Canada's most valuable brand. They are one of Canada's biggest banks and among the largest in the world based on market cap. They also recently announced that they would be acquiring HSBC Canada, an acquisition that will add $134 billion in total assets. The Royal Bank currently has 9 analyst ratings, coming in as a moderate buy based on 6 buy ratings and 3 holds, with an average price target of $106 for an upside potential of 13.5% for the next 12 months. On the low end, we do have a hold rating from last month with an upside of 7%, and within the last month we have a couple buy ratings with upsides around 20%. And fifth on our list, closing out the month of January, is pharmaceutical giant Pfizer. With a market cap of $287 billion, their stock trades under the ticker PFE, currently priced just above $50 per share. The pharmaceutical company has a 33-year history of paying dividends. With their next ex-dividend date coming up on January 26th for payment on March 3rd, they pay a quarterly dividend of 41 cents for a yield of 3.09%. Over the past 3 quarters, they've returned $6.7 billion to shareholders and repurchased $2 billion worth of shares. Of course, Pfizer is a well-known name in the pharmaceutical industry, and they focus their business on 3 broad segments, including primary care, specialty care, and oncology. In their most recent quarter, they highlighted positive pivotal data for several exciting pipeline programs and completed acquisitions of Biohaven Pharmaceuticals and GBT. Analysts currently rate their stock a moderate buy based on 6 buys and 5 holds. Their average price target comes in at $54 per share for an upside potential of 7.5%. On the low end, we do have some hold ratings from 2 months ago, one with a downside of 3.8%. More recently, we have a buy rating from 17 days ago with an upside of over 17%. So there we have 5 dividend stocks for the month of January, all with ex-dividend dates coming up soon, so you don't have to wait too long to collect that passive income. Now, you guys know I always love hearing from you, so let me know your thoughts on these 5 dividend stocks or what some of your other favorite picks are as well. Like I said, there was a long list this month. It was hard to narrow it down to just a few. As always, keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Please make sure you always do your own research and due diligence, as everyone has different time frames, risk tolerances, and investment plans. Thank you guys so much for watching. Here is to a much greener year with 2023. Cheers.